All right, I'm gonna do this little investment tier list video here. So we're just gonna go through these 12 investments. I know you might be saying some of these aren't actually investments. We'll go over that once we get to them. So right off the bat, we're gonna start here with one of these non-investment investments, the IRA. And you might be saying to yourself, IRA is not an investment, it's an investment vehicle. True. But I'm going to go ahead and put that right here in S tier because what it really is it's an invisibility cloak for your investments. It tells the government you can't touch any of the growth on this, no taxes. Personally, I have a Roth IRA, so that way I pay the taxes now. I have pretty low income, so I don't have to pay that much taxes. And then later on, I won't pay any taxes at all. So that's S tier right there, no tax. You can invest in whatever you want. You can put real estate in there if you're really trying. You can do gold, you can do stocks, you can do index funds, all that in your IRA, non-taxed. So S tier right there. Next one we're doing is annuities here. And as an insurance salesman, I gotta, tout the benefits of annuities. I know some people are, you know, not pretty wary of them. They're a little niche, is what they are. Is you don't want an annuity if you don't need it. There are definitely some situations where it's good and can really help out. I think there's some powerful things in there, like some of the cancer and long-term care riders that you can get. So as an investment, I'm gonna have to rate it pretty low. I'm gonna put it in D tier as an investment, but I want to put a little asterisk here because it does provide some other things, outside of the returns that we're kind of basing this tier list off of. So, annuities, the returns aren't all that great. You can get some good benefits. It's kind of like a CD sometimes, uh, but those perks, like the riders that you can get, definitely make them worth it. So don't take that D tier too lightly. All right, moving on here to stocks. So everyone loves to play the stock market, including myself. But that being said, I'm gonna have to put stocks pretty low down as well. I'm gonna put them down here in C, just because of their potential to be abused by most people. Everyone getting on Robinhood. I think investing in companies that you use is fine. Having a portfolio of 20 or so stocks that you've put together yourself, maybe that's your thing. Maybe that's how you get through your investments. Most people, though, aren't going to be paying attention enough to each of these companies to really put together a list that is going to be well thought out and beneficial to themselves. Most of them are just going to be playing around, gambling a little bit. So that's why stocks are going to be in C. You can get amazing returns, of course, but most people are going to end up losing money, doing things that they shouldn't do, letting their emotions get in the way, all that stuff that people talk about. But yeah, stocks are going down in C tier here. Bonds are up next. So bonds, I'm a millennial, Gen Z cusp, young guy, more or less. Uh, we don't do bonds. Bonds are like have never existed in my investing history. I know back in the day, 60s, 70s, into the 80s, especially when rates were really high, bonds were good. As of right now, you can get better returns with like some savings accounts from what I understand about bonds. So I'm going to go ahead and put them in D tier because I mean, we just don't trust the government in my age group here, so that's why I'm doing that, honestly. Next up, let's go to mutual funds. So mutual funds, it's kind of like a bunch of different stocks put together and managed by a uh, fund, a company, by a manager. And so because of that, you're going to pay that manager some of your gains. So there's fees, and you're going to lose out on some of the gains from those fees. But at the end of the day, there's less risk than individual stocks. You're trusting someone who it's their job to invest for you. So it's a little safer. I'm going to go ahead and put these in B tier right about here. Not a bad move. Definitely, something that the average person can get into and see a return from and, live off of in their retirement. Private equity is the next one we're going into. This one's a little more complicated because there are awful private equity deals, and there are great private equity deals. And what a private equity deal is basically starting a business or helping someone that you know start a business or finding a way to invest in small businesses that aren't, on the stock exchange, that are, not going to big investors, like not these big startups, but, just someone that and potentially bigger startups, you can get in on those as well if you know the right people. I'm going to go ahead and put these also in B tier. They do have significant risk, just like stocks do. But I feel like if you're getting into private equity, you're going to have a bit more skin in the game. You're going to be a little more careful. And you gotta know the people running this business, and you gotta know that business is gonna do well. So there's a lot more to it than opening up Robinhood and wasting a bunch of money on some stocks that you know nothing about. Next up, we got crypto. So big controversial one here, I suppose. All right, I'm just gonna throw it in here. I'm throwing it in an E tier. Yeah, I know. I'm a young guy, but I've got the boomer mentality about crypto. I've seen too many of my friends just not get it. They don't understand what they're getting into. And what I mean is that most crypto, almost all crypto, is you only make money when someone else loses money. And that isn't true about all investments. And it surprises me that some people don't know that. Most investments, you invest in it, and then the value of the investment goes up. Like it provides more benefit to society, therefore making it more valuable. With crypto, it only goes up because of the hype, because of the willingness of someone else to pay more for it. And the only reason they're willing to pay more for it is because they think someone else will pay more for it later. It's speculative. That's the word I'm looking for. It's a speculative investment. Whereas if you invested in McDonald's, they're going to make more burgers, which ostensibly makes the world a better place. So that's why crypto's down there. Yeah, we can go into a whole video about crypto, but not what I suggest for investment. Fun for gambling, maybe. IULs. So this is another insurance product, kind of like annuities, but honestly, absolute trash. It's like if you want an investment and a life insurance policy and like a savings account for your kid's college fund all rolled into one, which sounds really good. It's like, wow, all this stuff, I don't have to think about anything else. But it's kind of like if you want a bed and you want a sofa and you want like a dining set, so you buy a futon and like one of those tray tables, and it's like, okay, like it can be a bed, yeah, sort of, and it can be a couch, and like you can eat dinner, but like I'd rather just sleep in a bed, and I'd rather eat at a dinner table, and I'd rather sit on a real couch. Like the futon is just a worse version of all of those things. And in the same way, an IUL is just like a worse version of an investment and a worse version of a life insurance policy and a worse version of a savings account. Like just stupidly marketed thing. Gold. Gold is up next. Gold is interesting. There's a lot of history, of course, to gold, but I've seen people really close to me, get into buying and selling silver and gold and other precious metals, and at the end of the day, they're usually getting kind of ripped off by the people they're buying and selling from. Like these people are buying and selling and making a profit every time. So unless you have, you know, some sort of gold jewelry that you wear that's like, it's an investment, but it's also something else. Like that's the only real reason I'd see for getting gold. So I'm gonna go ahead and put it in D tier, just again because there's nothing going on. There's no cash flow. There's no, burgers getting made. It's just a static investment, and unless you're using it for jewelry, I'd say it's a pass. Index funds. This is one of my favorites. So this is basically a bunch of stocks in a fund altogether. And it's kind of like mutual funds, except it's algorithm based, so there's no managers. It's just based on, whatever the index is. Some of those are based on crypto now. Some of the most recent Bitcoin index funds just opened up on the US exchange. This can be, high dividend funds. This can be, technology funds, this and that and the other thing, S&P 500 funds. I'm going to go ahead and put these in A tier. Generally, people that are buying index funds aren't as, they're a little more risk averse than people buying stocks. They're, not going to get the fees of a mutual fund. Well, usually, from what I understand, they outperform the mutual funds. So, no fees and outperforming, definitely going to be in the higher tier there. Real estate, this is one that I've gotten into myself, luckily, back in 2020. And I know a few people out there that are doing this as well and really love it. I'm going to go ahead and put real estate up in S tier. I'm not going to lie. It has been really helpful for me. Personally, I bought my house back in 2020, and it's been a really cheap place to stay. I rent out one of the rooms, so it's even cheaper. And the price has gone up from what I know, from what I understand, so that's a good deal. And it's an asset. It's something that not only is going to be investment and grow in value, but like I live there. Like it's something that serves a purpose. It puts a roof over my head, which is great. And so I don't have to pay rent. And really, really just top tier investment because, as Mark Twain said, buy land, they don't make it anymore. And last but not least, we got collectibles here. This is a tough one too. Similar to private equity, you kind of just really have to know what you're doing. Like you have to be really involved in whatever community it is, whether it's playing cards or baseball cards or old electronics or what this, that, and the other thing. I'm sure there's a million different collectible people out there. So there's the risk to it. There's kind of just you have to enjoy the thing to really make it worth it. You can't just go out and be like, maybe you can. Maybe you can go out and just find things that are collectible and sell them online or something and hope that they get more valuable. But at the end of the day, I'm going to put it down in C tier because it's less of an investment and more of a hobby. So yeah, not too high up there. Well, there you have it, guys. That's my tier list for all the investments and sort of investment-like things. Go ahead and leave a comment below if you disagree. Tell me anything I messed up. I'm always willing to learn, and I'll see you in the next video.